All right, hello everyone, and welcome to our September 2018 Life Design Analysis webinar. My name is Charlie Conron. I'm the Chief Technology Officer and founder of Life Design Analysis, and I think we have a really great webinar lined up for you guys. Just a little bit of housekeeping before we start off. We're coming into sort of the end part of the year, and typically this is when we think of sort of the insurance business ramping up. We certainly had a busy summer, so we're very grateful for all the new members to Life Design Analysis. Remember, the topics we're going to cover today, we are going to record the webinar, so if you miss any concept or want to see something again, you can go to our YouTube channel. You can find that even on our site in the Help Center. But you can rewatch and watch certain parts, and we generally have an individual video for each of the concepts we show. So anytime we have a kind of a new concept, we like to break it out and kind of show it individually. So if you are in a little bit more of a time crunch, you can get kind of just the video you're looking for. If you ever need any help, again, you can always reach out to us on our live chat. So even if you're looking to get connected with one of the videos, we can help you out there. And if you are new to the system, again, we do basic training as well. So if you just wanted a general overview, if this is your first time seeing the system, remember, reach out to the sales and support guys. They can certainly arrange a one-on-one screen share, help you with an individual case or where you can use this concept. But we've got a lot of ground to cover in the concepts we're going to do today. So I want to jump right in. For those of you joining us, we wanted to look at some case studies for different clients, so how certain advisors made the sale. So one of the most satisfying parts of this business is actually when an advisor, kind of reaches back out and says, look, thanks to the software, it assisted me in helping to communicate the value of permanent insurance and the right kind of product for my specific client's needs. And that's really valuable because then we know, it's great to make sales, but it's really important to help protect clients. And that's really, kind of the reward for us. We started kind of brainstorming behind the scenes about some of these different kind of client personas. So, we have the stubborn client who I often liken to kind of that business owner. They always want to put everything into their business. They're never going to get sick. That's for someone else. It won't happen to me. So we kind of looked at all these different kind of personas. The procrastinator, so the person who wants to buy but just kind of never gets off the line, never makes the commitment to actually, sign the forms and say, let's do this, let's go through with this. Of course, everyone's probably come across the price shopper. So, this is the person obviously looking for value. They're going to try and squeeze every single penny of every purchase they make, and that's fine. This is a great customer persona, and that we can show them how we come about products and kind of go through our due diligence and show them how we make sure they get the best value for their dollar. And then, of course, the engineer. This is someone who wants to drill down on every metric, analysis on time value of money, analysis on alternative investments. Again, very price conscious, but meticulous in their analysis as part of their role, part of the way their mind works logically. And then we'll just kind of close up with housekeeping and updates. Now, the other neat thing is, this sort of idea for the webinar came out as a result of actually Melissa suggesting that, why don't we do it around one of the blogs we had written. So if you haven't seen our blog yet, definitely subscribe, make it a favorite in your browser. Lots of different examples in there, but we did do an article on how I won the sale. So if you're more of a print person as well, or you like to sort of augment the, watching a video or a webinar, combine that learning with maybe an article, we do break down sort of each of these different scenarios. So I mentioned the stubborn client. We give kind of the situation behind it. Today I'm mostly going to focus on how to build these examples, but if you do want to see sort of a little bit of a background on, sort of the situation that happened, what the advisor used as their presentation, and we're going to be going through each of these examples today, so I'll show you how to build these out. The procrastinator. So we're going to show a cost of waiting for them. We've got the price shopper, so we're going to show you, how to use term rewrites, how to do exchanges and things like that. And of course, the engineer, we're going to show you how to use some analytical options to satisfy. And we're actually going to use a MISO strategy. So I think this is a really interesting concept around, giving multiple acceptable, suitable options to a client. So, even if we do have an engineer and they want to analyze everything, we can give them 3 options that work all at different price points. And no matter which they pick, they're going to get coverage, but there's going to be certain efficiencies built in, and that's really going to appeal to the engineer. So we're going to go through each of these personas today, and I am going to start in order. So the first one I'm going to start with is the stubborn client. Now, any of these cases, if you're brand new to the system, you want to try these on your own, sign up free. There is a 30-day free trial. We don't ask for credit card on sign up. We want you to try it, fall in love with it. If you like it, again, you get access to all the different applications I'm going to show you today. This is our premier package that we're going to be looking at, but we do have other packages and flexible options. Main thing is try it, and again, every time you get a life insurance case, use it on that. Now, this is the main dashboard, so of course we're going to start with the first case here, and so I'm just going to click Add a New Case. And for this example, I'll pretend I have a brand new client, so I'm just going to click the New Client button, and I'll just say this is Mr. and then I'll call this Mr. Stubborn. Again, we want to give them a gender. We'll give them a birth date. I will make them, maybe I'll make them a little bit older. We'll say 64. Just say July 1st. Again, you can add additional details. We'll say Mr. Stubborn's not a smoker. And again, all of this information is valuable for that sort of client management portion of it. Again, if you're accessing this, on a smartphone, you can click on the phone number and things like that. So the additional information is important. I'm going to skip it just for brevity in the webinar, and I'm just going to create the client Mr. Stubborn here and hit continue. Now you can see Mr. Stubborn is 54. And this is the design case here where I can create any different options. Now, we'll just sort of refresh on the scenario here. So this is our stubborn client. Advisor kind of reached out to say, I'd like a second pair of eyes. This is a business owner with a pretty good problem, succession problem really, too much money in the business, and to transition sort of the business to their two sons and one daughter, not necessarily in the business. Insurance is sort of the perfect solution here. I guess the challenge was really just showing that this was the best solution to the client. Client sort of under the impression they could keep buying term insurance and investing the difference, but our advisor knew this is not really a great scenario for this. Insurance, one of the best things is it can actually guarantee the succession of the business, whereas alternative investments, it really depends on client behavior, market conditions, and it takes a little bit. It's certainly definitely a strategy, but just for this particular scenario, insurance was the most efficient solve. And what our presentation really wanted to show was that even this assumption that you can keep buying term and investing the difference, really just showing how much you'd have to make to equal that insurance component, especially considering the taxes in play. Now, we wanted to be especially conservative, so we knew, showing the guaranteed renewals wasn't going to work with this client because they'd simply say, well, no, I'll just keep reapplying for term. They are making the assumption they're healthy, but a lot of business owners, a lot of entrepreneurs, I find, are particularly stubborn clients because they're used to taking somewhat, I'll say, more calculated risk than the general population sometimes. So what we wanted to do is set up a buy term, invest the difference strategy and just show, even if you were to keep purchasing term, how that would look versus, sort of the whole life plan or the insurance plan. And again, this is one that the engineer could probably work with as well, because we could use that MISO strategy where we're going to show different levels of funding. But we're just going to say $1 million here is the insurance benefit. And what I first want to do is I want to kind of add that term product in there. So I'm going to hit plus term. Now this is working with our LifeGuide integration. And if you're a LifeGuide subscriber watching this, remember you do get access to our exclusive discount. So reach out to us and ask us what that is. As existing members, again, I'm sure you're all familiar with that. I'm going to pick a 10-year term here. This does work with different term lengths. So if you wanted to try this with a term 20 and say, depending on the client's age, if that makes more sense, feel free to. I'm going to go out of my preferred companies as well and just search that product set. And you can see I'm just going to hit search here. It's going to bring up sort of the and rank kind of the options based on price here. And you can see the difference in the percent higher. So if you want to use a particular company because perhaps you like their app or their underwriting, again, you can show and hide that information as well or add that sort of stuff to the case. I'm going to go with just this Manulife's Family Term 10. As just because it comes up as the top slot there. Now generally when you're adding products to the system, you just hit this add to case button and that adds the guaranteed renewals. But if you want to illustrate perhaps other projections that you could do in the future, such as a reissue in this case. We want to assume that at the time that this client is 10 years older, that they will be able and healthy enough to purchase insurance again, and we're going to reissue that as if they've applied, been approved, and we'll go with the pricing at their future age with new medical evidence. And again, we do add that into the disclaimer that this assumes that they will be healthy, and it assumes that pricing will be somewhat relative. Pricing is certainly going to change in 10 years. We don't know if it's going to go up, if it's going to go down. This is a good representation based on the knowledge we know today. So it's a good assumption that illustrates it, but it's certainly not a guarantee. And we want to stress that. So we also give options for stopping on the guaranteed renewal. At a certain point, based on the client's age, the company will no longer let them purchase insurance. Now, because, again, in the assumption we're issuing a term tenant that will have a guaranteed renewal, even if we're not able to get a brand new application process, we would still have the option to take the guaranteed renewal at that time. We give you the option if you want to show that or not. So some people would say, no, it's going to be way too much, I'll just lapse it. And that would be stop on guaranteed renewal. I like showing it. I like saying that, it would be an option. You could take that certainly. And I also like seeing that price spike just to really kind of set in, it's your choice to lapse it, but look how much it increases in price. So I just use the add to case as reissue generally when I'm doing this sort of scenario. So I put it in the case. It goes out and does its research. And again, you can see the pricing that it'll add in there. The renewal will not be quite as drastic because it's, again, assuming that it's with new meds. And I'll show you that as we add it in there. Now, our client wanted to kind of stress a whole life participating option as one of the best. Again, the business owner had extra cash on the balance sheet. They had a succession problem where they need to fund the one daughter who's not in the business. So again, we have to give kind of a valuation there. And insurance was just a very clean solution, a whole life. Now, I'm going to do plus whole life. And I'm going to select Empire Life Whole Life. One of the, in this particular case, the business owner was in somewhat of a rush, so the appeal to fund it really quickly was really good, but guarantees were still important to them. And the Empire Life product was a good fit. But remember, any sort of product you'd like to illustrate, you can drop in there. And any sort of age of client. I mean, really, the idea is to give them options and to show them, sort of the different courses of action they can have with the best sort of projections around it. And insurance is one of those things where it really naturally presents well because of the kind of the product design behind it. It really is a solution designed to solve that problem. Now, with whole life, again, you can search for rates. If you're looking for just like say a T100 with value, you can get the guaranteed rates just by searching. Sometimes when you want to show things a little more advanced, like the current dividend, the reduced dividend, the guarantees, and contrast all three, we would recommend that you import the spreadsheet. There's two different ways. You can import either the entire Excel sheet that's pumped out, and I'll show you how to do this, or you can copy and paste to bring it in there. I generally use the copy paste method. It's just a little bit quicker. But essentially both methods entail going over to the illustration software of the carrier. So in this case, I'm going to pull up an Empire Life case here, and I'm just going to kind of design it to my client's specifications here. So again, we had I believe it was 54-year-old. So we're going to say 54. We had a male non-smoker. Our coverage was going to be that 8-pay. We're going to solve for face amount here, so I'm just going to say the $1 million we were working with. And again, remember, you can design anything else in there. So we're doing paid up additions annual. You can design these how you'd like. Essentially, when you want to get any kind of data from a whole life or overfunded UL into life design analysis, you just go to this view data button. It looks a little different in most carrier software. It's very similar. So they all have sort of this view data export to Excel. And you can see all of kind of the information about this plan, everything from the ACB, the NCPI. It all comes into this spreadsheet. So I'm just going to hit export to Excel. It always gives you this warning message, and sometimes for some reason the carrier software pops back up. We just want to minimize that. Now in Excel here, all of this kind of data we leverage in life design analysis. So as I said, there's two ways to do it. One is just save the whole spreadsheet. If you're familiar with saving files and comfortable with that, save it to the desktop somewhere easy. You can just drag and drop it in there. I really like the copy and paste method as well. You can go top left of any Excel sheet, hit this little button, and it actually selects everything perfectly, and then you would just right click and copy, or again, I'm using those keyboard shortcuts for copy. Again, we copy it, we come back to life design analysis, specify our method that we want to paste the spreadsheet, data in the box. We paste everything in there. Don't worry, it looks all kind of jumbly numbers. We're expecting that. That's where the magic comes in. We kind of help parse that out and get the important information. And now you can see we've got our 2 products in there. Now, I don't necessarily want to show the T10 reissue in my comparison. You'll see when I generate the report here, I'm going to have 2 different products that are compared in the report, and it'll still make an excellent comparison, especially with the kind of the YRT rate renewal at the end there when our client's no longer healthy enough. But I don't really want to show this graph here because, again, we're trying to get all this money off the balance sheet, and again, this is a reissue of terms, so it's not going to be as expensive as the classic one, but we want to use the data in this plan as our kind of alternative baseline. We've got to take that out of any invest the difference scenario because our business owner still needs insurance before they transition the business should something happen. So again, we need to make that those costs recognized in our buy term invest the difference scenario. Now, what we can do if we don't want to show, we want to add the data into this, but we don't want to show this plan in the report, is just this little hide from report button. So again, I sometimes say, you can add more plans if you think they might come up in your meeting. You don't necessarily have to show them. So I sometimes liken this to, the ace up your sleeve. So I'm just going to hide this one from the report, but I want to use its data, as I said, in our buy term invest the difference. So in our whole life plan, again, I can go into this other little button, which is the edit plan, and this is a great little button inside where you can change things like your names or add descriptions, so add extra client information, link to things like e-apps. You can also specify the buy term invest the difference. So even if you had a couple different term plans, in our case we only have the one, but if you had a T20 or something, you can choose what data set you want to use as the cost for that buy term invest the difference scenario. So I'm just going to say the Manulife reissue. And the reason I did the reissue is I want to be the most conservative. I know our client's stubborn. We want to show them the most conservative assumption. Now, because this is really focused around that kind of the buy term invest the difference, I'm going to take away a few of my report components or pages in the report. So I still want, the mission statement, report notes, all of that. Report notes, it would be a great one to add a buy term invest the difference concept. So I'm just going to go here and add buy term invest the difference. That's a good note to put in there. Remember, those notes can have links if you want to customize them. I haven't done a needs analysis, so it won't show up. I'm not going to do the annual premium or the sum of premiums. I'm just going to show the cash insurance. No overlay is in play here. Credit to the CDA is great. I might actually show that just for this business owner. I'll do the presentation summary, and then I want buy term invest the difference. I'm going to get rid of everything else here. Equivalent IRR would be great in this case, but we just wanted to simplify it and show kind of that one strategy around buy term invest the difference. So a lot of the presentation internally was going to focus on that. So once you sort of customize those pages, again, all you have to do is hit generate report. We compile everything, do all those calculations, and again, for those of you watching for the first time, it's your logo that goes on here. You can customize that up in your account settings. So, we've got our mission statement. We included a little funding page here on buy term invest the difference. This is really nice. Put your own verbiage in. You can control different templates. We've kind of got the ask here, what our premium schedule is, and any of those extra details we can add into, sort of that description. So I would add a little bit more detail about, some of the advantages, why we're suggesting this strategy. Again, we can make that 8Pay look incredibly good. Feel free to add a PV to this, to show time value of money and show how those paid up additions fight inflation is a great way to use that. You can show guarantees. So one of the great things about this product is there are strong guarantees in it. So we know it's a guaranteed 8Pay, so we'll never pay that will be the guarantee. We'll never pay more than $601,000. And you can see here on the guaranteed scale, it's right about before age 70. So again, if this business owner was thinking about that, kind of landmark for retirement, that's a popular age. Everyone kind of thinks 65. I think the trend is a little bit later now. People are actually enjoying, especially business owners are enjoying working if they're successful into their later years, and health plays a big role in that. So again, you can focus on guarantees. You can show reduced examples as well. You can show all three. And you can even add a custom note. So you might add something about leverage here. You could say cash value can be borrowed via loan and say tax free. You could save that. So anything that helps kind of describe, features of the product, pivotal moments of the product. It's going to help when we actually share this presentation with them. Again, we can see the growth. Now, what we wanted to focus on, this is a wonderful presentation. It's going to be a great leave behind. We wanted to focus on this buy term invest the difference. You can see I've set a net 3% rate of return on this. So we usually say, this one will just say, you decide what sources of income the client's going to use and basically net it out there. So if it's dividend income, just give us the net of all those different income sources. Generally, we find with business owners, people are essentially saying, we'll slash it, whatever kind of income source you make, you're kind of going to give half away to the government with a traditional investment at that sort of tax bracket. So, you can control that. You can see the buy term invest the difference. I have it here at 3. Again, we may want to put 4. We may think our client is a little bit more aggressive. They think they can make 8%. Maybe they're, there's bullish market. They think they can make 10, and we want to put something like 5% in there. We want to be super aggressive. Again, it's only going to work out because when they see kind of a more conservative illustration and even some of the values of how aggressive they have to get in the market to even equal the insurance and some of the benefits, and equal it with a guarantee is still better. And that's going to be helpful in our presentation. So I'll just scroll down here just to the buy term invest the difference page, and you can see, even with an expected, an average 10% rate of return every single year, minus the cost of what that term insurance would be, you can see, even the cash value of the whole life plan is on par. So with a guarantee in there, of the insurance benefit, we're actually on par. Now, insurance is always important in this scenario. So one, we want to see that we're competitive in a cash scenario, and even being, super aggressive we are, which is good. You can see things like the reduced, you can see a reduced buy term invest the difference, but what I want to see is the insurance benefit. So down here in the legend, they're blanked out by default. But insurance benefit is also important because, in this scenario where they're investing that difference, at some point their insurance ends here. So if they're to live past, there's no benefit here past 80 in the one scenario where, if we can say, look, we equal the cash and we have a guaranteed benefit for insurance. There's the total. So great way to kind of splice down that buy term invest the difference here. Again, blue here represents the cash. If they were to take the premium, invest it, make 10%, give half of it away, net 5% of it. Green is this total cash value. And again, like I said, you can always be more conservative. You can add the reduced cash value too. So let's just take a look here. So there's the total. I want the reduced. There it is. Sorry. So again, I can always look at the reduced and say, look, yeah, the reduced is a little bit less, but we're not taking any of that risk. Especially considering that Manulife insurance benefit is going to end and expire at age 80. So again, we don't have a guarantee in place to fund the business. And that really helped our advisor make the sale. Now, the next persona that we're going to work with is the procrastinator. So this is the client. I love this GIF here. I'm not indecisive. I just can't decide. I think a cost of waiting presentation works for a client who's, clearly wants insurance. They want to do it. They know it's needed. But again, it's spending the money today when you know you don't need to. You're not gonna pass away today. So you keep, waiting. When's the right time to do it? The assumption is, the longer I wait, the less I'm actually paying premiums today. So it's kind of like that gambler's fallacy. The only problem is, insurance being an actuarial science, we factor in that increased age, and that's really the most expensive thing that you can have, maybe aside from being a smoker. So our age is really detrimental to the cost of insurance, and especially with permanent products, the earlier we start funding them, the more cash value we get, earlier accumulating, and the lower the cost of insurance we get. So what we wanted to do for this client was just show them what it costs to, buy now and do the conversion. If this was a client with a term policy, or would they wait 5 years and convert, sort of at the end of that term policy? So let's set up that presentation here, and I'm just going to go back to Life Design Analysis. I'll use our little handy sidebar here, and I will say add a new case. So these are kind of shortcuts to our most popular kind of areas in the site. Now again, for this one, I actually have a sample client. My sample client happens to be 40, so I'll just pull up sample client. If you're working with a existing policyholder, just type their name in that box, it brings them up. So what we want to do is we actually want to enter their existing policy, and I think actually my sample client has quite a few enforced policies. This is a well-insured person. Let's go ahead, and I'm just going to let me try and bring in ABC123 and just see what policy this is. Okay, good. We've got a term 10 here. Now, this is relatively new. I want to make this kind of 5 years old, so I'm going to slice off. I'll artificially make this one a little bit older. Let's make it back to 2013, and we'll just say the first, and we'll just hit save. So we're going to fudge the issue date a little bit there. But that's going to help us illustrate, sort of the existing plan, where it is, when it's going to renew. And again, I'll just generate this report just so to show you really quickly here. When you do mark something with an issue date, again, it's going to factor in when the issue date was and how many years left to the next renewal point. It's also going to color it in things like red, so it's more cautionary. We know it renews at an increased price. We can see that renewal schedule out from what we've put on there. So this, again, when you do mark policies in LDA as sold, really easy to review them in the future and stack them up against whether it be a new term 10, longer length term, ideally something like a conversion, even a layered conversion. Really, really effective presentation. I'm going to go back here, and what I wanted to do by just adding this was really just get the premium pricing for the first 5 years. So we know it's going to be $1,740. Now, what we're going to do is we're just going to hide this one from the plan. I just wanted that data in there. Now, what we're going to do is we're going to add a whole life product as if it were purchased today by the client. So I used Empire already. Let me do an equitable life whole life here. So I'm going to say equitable whole life is going to be our sort of whole life plan that we want them to think about buying today versus later. Again, I'm just going to go across, get rid of my old quote from my last one, and I'll pull up equitable here. Again, I'm going to make this a 40-year-old male. We're doing paid up additions. We'll do $1 million 20 pay. We'll keep on that $1 million. Maybe we'll do 500. Face value, this concept works with any different face value. I'm just going to generate report. You can see in equitables it's a little tinier, but it's just this view spreadsheet data. Same sort of result, gives us our 20 pay, all of our data, and again, little tiny export to Excel. We click that button. Of course, we get a warning. Yes, another warning. And we say OK. Now, again, same sort of process. We can either save the whole spreadsheet, and this time I might as well save. So I'm going to go File, Save As, and I'll just call this the baseline. So this is our baseline quote. I'm going to hit Save, and I just want to put it somewhere that I'll find. So I'm just going to put it to the desktop, and I'll hit Save. Now, once it's saved, again, we don't need this anymore, and we can actually minimize our software. We've got all the info we need. We can come back. In this case, I'm going to say Import. I can either drag a file and drop it, or I can click and find it in the file browser. And again, I just saved mine to desktop, so I'm going to look for my baseline and just say Open. Again, you can see it's working away here. Takes only a second, refreshes, and says it's been imported successfully. Now, I want to be clear that this particular one is bought today, so I don't necessarily even need to focus on company as much as concept in this case, and I want to say like buy today, and I'm going to hit Save. And then we're going to work on a wait till later. So this is a procrastinator. They have a term policy, but they're going to wait a little bit to buy later. Now, when we find something a little bit outside the box, we can still get these kind of projections and calculations in there. A lot of the time you might be able to use the manual for even corner cases, even other product that you would want to get in there. I've seen things like annuities and other types of insurance products and investment products illustrated via sort of this area. But again, you can hit plus manual whole life, and this basically brings you to an open-ended spreadsheet input. So similar to kind of an online Excel where you can drop in data and really any kind of data. And I'm just going to say this is convert at a future age, or like wait till term expires to convert. And then I just do want to add a little like assumes current div. So I just want to add something like a disclaimer, because we are going to, again, we're projecting out that the whole life, again, in 5 years would even be around the same pricing. Now, we don't know what either dividend scale is going to be, but this gives us, again, an accurate representation of how we can illustrate this kind of concept to them. Now, you'll see I can go into the paste spreadsheet data, and here I can input anything at all. So one thing we do know is that our client, and I'll just go back here, let's see here, had that $17.40 premium. That was their term policy. So we're going to say for the first 5 years they keep paying this, and I'm just individually pasting this in here. For the first 5 years, that term policy is going to have 0 cash value. So I'm just going in here and entering 0 for the cash value for the first 5 years, and it's going to have a $1 million benefit. It's just that level, $1 million, and I'll actually just copy this so I can paste it in here like that. Perfect. Now, at the 5 years, when their term policy comes to that guaranteed renewal, they're saying that's when we'll convert. So that's when we want to go back to our illustrator here and grab what the numbers would look like in 5 years. So let's go back here. We're going to say now you're not 40, you're 45. So we increase them artificially so we can see kind of the impact of pricing and quite frankly as cash values as well. And we're just, again, going to go to view spreadsheet data. Now, when you're doing a copy and paste for the manual, one of the neat things, if you're comfortable with the keyboard shortcuts, is you can just highlight here and do a Control-C or copy, come back to our software, and paste that info in there. So you'll see it just fills all the way down. So I'm just going to grab the premium, and I'm going to grab the total cash value. So let me find total cash value here. There's guaranteed, cash premiums. There we are, it's total cash value. And I just want to make sure I go again right from the very top all the way to the bottom. Control-C, come back to our software, and we're going to paste that cash value in. So they'll start getting cash value once they convert. And again, their insurance benefit is going to grow too. So we'll come back here, we'll look for that total insurance benefit. So going across the top here, there's the total death benefit. Now again, just remember when you're doing kind of the clipping from the illustration software, get all the way back up to the top there, grab from that first cell, and go all the way down. Now again, if you're not comfortable with those keyboard shortcuts and you want to do a right click, of course you could export that to Excel and do, kind of clip it from there as well. So we're going to do the insurance benefit. Now I'd recommend put in those reduced examples. So this kind of spreadsheet you can get, there's lots of different stuff you can get in there. Again, fill in as much as you can about the reduced. For brevity, I'm going to focus on the primary, but I would recommend when you're doing it yourself, and this is just to save time, that you would enter in those reduced values and the guaranteed values too, because it's always very beneficial to show that to the client. Again, once we've got the data in there, I just clicked the upload button, and you can see we now have a buy today versus wait till your term expires. And again, this one's hidden in there. If I want, now that I've remembered that pricing, I can even get that gone. So I can say get rid of that one. Now again, if you'd like, you can customize these pages. So let's go through and say, if we're focusing on the cost of waiting, what are the most important, sort of plans? Now, because we have two sort of products with cash value, I really like the cash overlays, but I find because if I have total cash value on, it's going to produce an individual chart for each one. I'm going to take these out in lieu of the overlays. CDA in this case is not important. This is not a business owner for this scenario. Definitely the presentation summary. In this one, we're not focusing on buy term invest, so I'll take it out. Internal rate of return. I may look at, because we're doing two, I may look at the charts of IRR. For insurance benefit and cash value, but I'm going to take out all the tables. I just want to kind of slim this report up a little bit. So remember, each case may have different, components, a little bit different from your default ones. The default ones just kind of help add your favorite ones in there. But again, there are other ones. And again, we've got kind of everything set up, so we're going to generate the report and take a look at what this looks like here. Okay, so of course, beautiful report. We've got our logo, prepared for the client. This would be a good one to add in a report note about, sort of why you recommend moving today, and even summarize, some of the key facts of the case, like how much cash value difference there's going to be. So it really makes an impact. It focuses in on certain years. Now, what we can see here is, by starting today, we're done in 20 years. So we start funding it, we're done in 20 years. If we wait 5 years, that 20 pay is actually going to take us 25 years to finish. So we're going to be done at a later age. You can see, there's an increase in price later. Again, this is going to be a great one. IRR is really going to help us, show that time value of money as well, because it works kind of to get net present value to be zero. This would also work with a PV if you wanted to, show, sort of more around that premium basis of inflation and waiting. Sure, it's going to be, increase in cost, but, time value of money also means it's less drastic. So you can flush those out if you want to get super advanced, maybe with a CA. Really like this chart. So it shows, basically we pay that cheap term 10 policy. When it comes up for its guaranteed renewal, we convert. As a result, we pay a higher premium here. So 27 if we do it now, 31 later. We're done perfectly, at age 60 if we start at age 40, buying it today. So we're done earlier. With the other example, we wait till later, so it's still nice that it's funded at kind of that planned retirement age perhaps, but, definitely took us a lot longer. And then the other thing we want to show is, how much longer did it take cash to accumulate? So again, sum of premiums, you can see actually by waiting longer, this is a great one, and this would be a good one for PV too, but you can see by waiting longer, you pay more in the long run. So certainly less expensive in these early years. Overall, you got to fund it, so it's a lot more expensive. And we'll flush out those differences when we get into that presentation summary. Now, again, buying it today, not only do we start getting cash early, we have more cash overall. So another benefit of buying it today versus buying it later. The guarantees are going to be mirrors of these, and same with the reduced examples. I've only entered the total, so we'll focus on that. But again, I would recommend having all of those. And as a result, again, buying today gives us more overall insurance. So, when we get down to the presentation summary, we say all said and done, you're going to pay, by waiting to the end of your term policy, you're going to pay $81,900 more. You're paying $82,000 more. That's a lot. That's a very nice car that you're paying more by waiting. You're also going to accumulate cash value differently. So by doing it today, you start building cash value immediately. By doing it in 5 years at the end of your term policy, by the time you retire, you're $250,000 down in cash value. And insurance is also popular and obviously very important. So we want to highlight that too. By life expectancy, you are down over $500,000 of insurance benefit by waiting. And that's how this advisor won the sale. So it's incredibly effective in showing the difference of accumulating cash today, locking in your insurability, especially when we're talking about permanent products. So if you do come across the Procrastinator, I'll recommend the cost of waiting to show them. And if you need help with this concept, again, how it works, we do have a video on this, of course. Now let's move into our next case study. So this was obviously a highly effective one. Our next one is the Price Shopper. Now, our Price Shopper comes from us from an advisor. It was a lead actually on their website. So, classic situation, modern buyers today, I think Lemur's study is that 85% of buyers go online and do some sort of research online before purchasing a policy. And I can only imagine that trend has increased since they did the survey. I would not be surprised if at some point that trend reached 100%. Now, all the studies out there still show that consumers do still predominantly prefer brokers, which is why we're extremely bullish on the broker market. However, they do want to augment that experience with technology and make sure technology is working for them for things like the easiest experience, the most communication to the client is where we can leverage technology, and even gaining leads to these clients. So this client actually came to a broker through a quoter on their site, which captures information and spits out a price. And this client was definitely price shopping, and it seemed like they had thought, the more I look around, the cheaper the deal, or an advisor will be able to get me a cheaper deal. Now our advisor sort of said, look, I'm licensed with all of these different companies. I'm an independent advisor. I've got about 20 companies I'm licensed with, and I can get you the best price. But regardless of what company you go with, the prices are the prices. I can't reduce them for you, and I can't reduce my comp for you. This client was obviously looking for the cheapest term 10, a younger buyer. And what our advisor offered to do is say, look, I recognize that you want value, but what are we buying insurance for in the first place? And the trigger was a new house purchase, and again, cash flow was obviously an issue. First house, younger client. Now, I'll show you the report that we built. We wanted to turn this around and say, this is a great opportunity. People who are price shopping, as I said, they want to squeeze value out of every penny, and I myself am like this. I want to find the best deal possible because I know, by doing a little bit of research, sometimes I'm able to save hundreds of dollars. And I know a lot of our advisors are like that too. I know you guys absolutely love taking advantage of a discount when we offer one, when a sale when we offer one, and I don't blame you at all. I like getting value. Now, I'm going to make a new client here, and I actually think I have one called Mr. 30. So we're going to use Mr. 30 here. I hope Mr. 30 is a 30-year-old. And their age near is 31. So even my Mr. 30 is aging in my system here because of this birth date. What I'm going to do is I'm just going to backdate them. So if you ever need to change an age nearest from a client, so you can see age 30, age nearest 31, you can actually use this client age override. So I'll make this client 30. And again, we're going to save $500,000 of insurance benefit. Now, with a client who was, not 5 million, that's a big jump. So we'll say 500. With a client that is, we'll say a little bit more frugal or definitely looking for a deal, that doesn't have to be a bad thing. We can certainly sell them a term 10, based on the products that we offer, our preferred companies. But knowing someone wants value out of something can become an advantageous thing. So what our broker actually did, they were also a little bit more tech savvy, is they actually launched into a GoToMeeting. So they launched up GoToMeeting and did a screen share to say, look, you have a $500,000 need, you're buying it for a mortgage. I want to show you how I get you the best price possible in my process for finding you the best price. So they did a screen share. They created the client details, loaded it in here, and said, look, I'm going to take you through how I research and add different products to make sure you get the best price and product for your needs. Not just price initially, but something that fits long term. So what they did is they said, look, I want to show you here how I do this. So they said, look, you're looking for a term 10, and you're looking for the lowest possible price out of all the companies on the market. And they showed them, look, we have connection with Life Guide, which is the preeminent multiple quotation service out there. And again, those Life Guide subscribers, I mentioned it before, but you do get a discount for 50% on LDA. It is exclusive for you. So I'm going to say all companies and select term 10 and hit search. Now, again, the client is watching this. They said, this is how we do our research and find out, what product you want. So, while you have seen, other products on the market, this is exactly how we determine, what we ultimately recommend for the client. And they talk about things like, later on you may want to convert. Have you ever heard of Canada Life? Have you ever heard of Great West Life? Have you ever heard of London Life? They're all part of the Power Corp. So even though they have different names, very similar product, and you can see that's reflected in the price. They can also show that, even though, we're talking dollars here, we're talking $5 kind of a year difference in the price. So depending on, sort of the medical that you would prefer to do, or if you wanted to do it non-face-to-face even, might impact one of these companies that we do pick. But, we want to show you that, it doesn't matter to us particularly which product you go, but we're trying to get you the best product for your required needs and what you've expressed. So, we may be thinking about things like a term conversion later on the line where you're just thinking about, why would I even pay 3% more? Something like that. So, client goes, okay, so I get that. And then the advisor says, but I want you to consider, other options. You like value. I get that cash flow is an issue. So I certainly can sell you this T10. But because you bought a mortgage, I want you to consider something like a T25. So, just hear me out. I just want to show you that there are other options out there. So they go term 25. They just say, we want to show you here. Again, we're going to search all companies and go for a T25. And just show you why it might fit. Again, you can go down, you tell me which one you like, which one you've heard of, which one you trust, which one you like the medical on, and I can pick whichever one and add it to the case for you. You're in full control. And that's what, a price shopper might go, hey, I like that IA Excellence. I've heard of them before. I like BMO. I bank with them. Maybe there's a relationship somewhere, and you can say, okay, great, let's just add them conceptually to the case. Then we say, our advisor said, the other thing that I want you to know is that if you do pick a term 10 and if you do buy with me, as an independent advisor, again, I'm looking out for your best interest. I can also show you a strategy where you can exchange this, when it's locked in there. So I want you to look at this first and say, they generated the report first of all, and they looked through it. And, the client liked what they saw. They said, okay, T10, T20, renews. So they saw this and they said, well, I'm only going to be 40. I might reapply it then. And the advisor said, you'll likely be healthy, but it's not a guarantee. Anything can happen in 10 years. We don't know, where the insurance space is going. But they did say, the one other thing that I can help you with, and what they wanted to emphasize is that over 25 years where the mortgage is, they wanted to show the savings. And our client definitely loved that, but it was a cash flow issue. So ultimately what the advisor said is, the other thing, if you do go with me, that I can help you with is that you can exchange this T10 to a T20 at the 5th year. With Canada Life, I believe you can do it before the 7th year, as long as your client, I believe, is under 65 as well. That's the other thing. Definitely a viable strategy for this client. But again, in the sake of the advisor, they said, I just want to be transparent and show you, if you do a 10-year term, and we'll just pick that same Canada Life one, you can do an exchange after 5 years or so, and essentially make it a term 25 with that exchange. So they wanted to illustrate that to their client too and say, look, there's a couple different options. We'll just move that one up there and we'll generate the report. So they wanted to say, this is why you work with an independent advisor, and this is why you work with me specifically, because I want to show you that, you do have different options out there, and I'm going to help you be able to work this policy. I'm going to try and, save you the most amount of money, but if that's not possible, I want you to show that you do have options out there. And this is the neat one, the exchange after T10 to T20. So again, you can see at the 5th year, changes to a T20 pricing. I'll just actually go up to reflect that in the schedule there. So exchange to a T20 after. So here's our T20 rate following that for 500. And then again, gets on that 20-year renewal schedule as well after that. Again, we're doing this for 25 years. If you do want, again, you can go and adjust this time as well. Again, I'm going to just say, let's just do it till 65 or something like that, if you wanted to show those renewals after that point. So again, you could still illustrate that and say, the spike on that T20 then after that is going to be somewhat larger. So really neat way to, kind of highlight them. This is a person who was price conscious but had a 25-year need. Now, the result was actually the sale of this term 10. Cash flow was too much. It made more sense with, they were sort of planning a new baby and things like that. But what it did accomplish was, getting the trust of the client and saying, I'm being transparent with you. I'm showing you that, even if you do go with this particular product, I'm going to be able to help you exchange it later and get the best possible pricing. But I also have other options, and I have the tools to make sure you get the best product and that I am out for your interests. And this case was a win. It wasn't necessarily the full, we sold the client the highest FYC possible, but it was more of, we've acquired a client, and I've heard from this advisor too that they also actually got coverage for the spouse as well. So this was a great example of a price shopper out there that was acquired through the use of being transparent and showing the different market options, and really helping kind of guide this particular client through the insurance process and helping them see the different products and insurance an independent insurance advisor offers. A lot of clients out there don't know what that even means. I certainly didn't realize how that sort of distribution market of insurance works before I actually joined the insurance industry. But again, great way to show your clients, look, I'm after your best interests, and here's how I do my research. You could even do these presentations live with them, walk them through, make sure changes to the variables. Great way to take them through a case. So that was a great example of a price shopper and how we won the case. Now our last one is going to be the engineer, and the engineer again is very analytical, so we're going to use a MISO strategy. So let me show you, I'll give you a little bit of a background on the situation, then I'll show you how we built the presentation to win the sale. Now the engineer is a very analytical person who really likes to stress test different options and make sure they're getting the most efficiency. Again, engineers are highly logical, very data driven. Also I find very conservative, and again I say that coming from myself, my background. I went to school for mechanical engineering and actually worked at a magnesium die casting factory for a while doing engineering work and consulting. They actually kind of put me in the data transfer business when they found out I could do computers, and this was again very at the early stages of my career. before I was introduced to the insurance world. But engineers, again, we had our advisor say, what can I do to help make kind of the best presentation possible for this client? Our advisor said, we know they have a need for permanent insurance, but we can't seem to, kind of get them over the hurdle. And this particular agent, had showed different options. And we had suggested a MISO strategy. If you haven't seen our blog on asymmetrical dominance, it sort of, it helps people come to a decision when they can compare different options. And if there's multiple suitable options, anything that would solve the goal, any option would be good. There's different prices, but using that sort of asymmetrical dominance to have one that looks really expensive and one maybe super cheap can help someone land on the middle area where we think they should be anyway. So we said set up a new case, and again I'm just going to go in and say add a new case here to LDA. I don't know if I have a Mr. 45. That would be nice. You know what I'll do? I'll say Mr. 40 here, and then I'll override Mr. 40's age to 45 using that client age override. So we're going to say we have a 45-year client, and again, I'll call this, I'll give it a case name saying it's the engineer, and anytime you come up with this. So we wanted to deploy multiple suitable acceptable options. So what we did is we were going to say, okay, we need permanent insurance. Part of it may be a layer. So we may say, we want a universal life layer here. And what I'm going to do is I'm actually going to go plus layer to make this really easy to set up a layered plan. I'm going to say overall we're going to do $1 million. So we'll say that. And we've got a 45 male non-smoker. So I'm going to add my first layer, and what I'm going to do is for this I'm going to pick one company to work with. I'm going to say, our base is $100,000 of permanent insurance. And we're going to say for this, we're going to use universal life, though you could use, a traditional T100 with values, that sort of thing. I'm just going to go min-funded T100, basically, min-funded UL. My second layer, I'm going to say, okay, we need $1 million. So if our first, overall, if we need $1 million, if our first layer, I've actually missed a zero there, I'm going to say is 100,000. So I just want a 100,000 layer, just to clarify there. I'm going to say I'm going to make up the rest of it, the 400, with some T20. So I'm going to say plan type is term, and term length is 20. And I'm going to add one final layer, and that's going to be for a whole 500,000. My plan type will be term, and in this case I'm just going to say it's going to be 10-year term, and I'm going to say add to the case. Now, what our software does is it assumes with these term plans when you're doing a layer that you want to lapse the coverage at the end of that term length. You can adjust that if you did want to see those guaranteed renewals, but it basically adds each individual plan it found, mixes them into one, and you could say this is option one. So you could say, let's just call this bronze. Bronze. So I'll just call this bronze. We're going to do like a bronze, silver, gold strategy, or you could do, kind of whatever kind of layered approach makes sense for your particular client. So you can rename these to make it a little bit easier to look at. Now for option number 2, we wanted to do something a little bit more expensive, but along the same line. So what we're going to do is we're going to say plus whole life, and I'll use again equitable life in this case because I've got it up. And I'm going to design a silver option, so sort of a middle of the line option here. And this is all about what MISO, or multiple suitable acceptable options, is all about. So it's either of these are going to provide permanent insurance. They're going to come in at different price points, and it's hopefully going to help our client land on one because the other two options either make it more or less expensive or offer more or less value. So I'm going to say silver as this plan and say save. Now again, I think this appeals to engineers as well because they're used to paying more for like different cost of materials. So a lot of professionals out there recognize that more priced isn't always bad because they're used to it paying higher material costs and things like that. So I'm going to do a 20 pay option here. You can see I'm going to actually do an enhanced protection though, and I'm going to say I'm going to drop this down to 100. So I'm going to keep that base level the same, $100,000. And again, I want to add riders 10 and 20 years. My 10-year rider is going to be 500 again, and my 20-year rider is going to be that 400. And again, our client's 45, so this one's going to go to 55, and that's going to go to 65. So again, we're going to do the same thing. We're going to lapse them. The other way, though, again, we can still bring it in through designing it in the spreadsheet, term riders, and all that work. So same process I was using for whole life before. Again, remember, this is sort of our digital fingerprint of the plan. Select everything. And I'm going to go a little faster here just for the sake of time. I know we're coming up to the end. So I'm just going to paste this in there here. and upload it. And then we want to finally add a gold option in there. So again, I'm just going to sort of repeat, and even if we think, maybe they don't have the affordability for this, I just want to show them what it looks like. So again, I'm going to make a gold option here. I'm going to go and say that this is a whole life. Again, I'm going to edit the title here and say that this is gold. I'll save that. And to our gold option, we're just going to come back here. We'll get rid of our old spreadsheet so we don't get mixed up. And we're going to come back. I'm going to keep the riders the same. The only thing I'm going to do is instead of enhanced protection, I'm going to say paid up edition. So again, essentially the same kind of blend of product, but this time, again, we're going to have paid up edition, so we're going to see a little bit of an increased cost there. So again, export to Excel, same sort of process. Again, grab that, copy it. And again, once you do this once, it becomes very easy going forward. Again, we'll paste it in there and upload. And this is a great way, again, to take the conversation off of, do I need insurance? Maybe I don't. To what type of insurance do I need? And we are giving different options on funding it. So bronze, silver, gold. Put these in whichever order you want. I'm just going to go into my report components here. Again, I just kind of want to call a few of them. So, sum of premiums is good. Annual premiums maybe a little bit boring because it's kind of the same thing, but I am going to take out the individual cash for total cash and insurance and opt for the overlays. I'll keep a summary. I don't need any of these. IRR though is a good one, and I'm going to use the table IRR. I'm not going to use the equivalent, but I am going to use the table because an engineer likes efficiency, and IRR to me is the best measure of efficiency of a policy or any sort of capital deposits. Cash flow projections over time is usually how businesses are evaluated, big purchases for equipment and things like that. Does it make sense to pay it up front? Does it make sense to pay it over time based on the interest rate? That sort of thing. So again, we've got Mr. 40 here. We can go through the report, and this is what I really like here. Again, so different price points. Going from kind of least expensive to most expensive. We do have some changing points here. 10 and 20 years. We're finished paying the whole life at 20 years. At 10 years, that rider falls off. So we're actually seeing prices decrease when those riders come off. Different annual premium schedules, right? The UL, of course, they're going to pay for life, so that's going to be the one thing that maybe kind of drives them and says, I don't want to have any kind of cost once my income is more fixed. And I like, the appeal of, something that finishes, though they might say, and I don't like the expensive option here, it's way out of my budget, and it pushes them and uses that asymmetrical dominance to push them into what you really thought was best for them anyway, which is kind of the middle of the road option. Now, none of these options would be terrible to pick. They're all going to accomplish the goal, and that's kind of the brilliance of a multiple acceptable suitable options, is that it gives them choice. It makes them feel like they have control. We've given them some analytics to say, we can look at plans that have cash value versus none. And it's really, what do you want to pay? And we can match and solve this benefit issue that you have, and it's either, gold, you have more insurance, you have medium insurance, you have less insurance, and you dictate your price, which they're going to see. Again, we see that there is, a little bit of a difference in price and how we're going to work that strategy. Now, when we come into sort of those cash value comparisons, that's what's going to be really effective here, is just showing that, the more that you do pay in these products, the more cash value you'll get out of them. And again, looking at, sort of an internal rate of return and saying, here's your cash value. If you thought about it at age 70, you could see, we have a much greater efficiency of the actual plan by going with the gold option. So just like material costs that you would purchase for, tooling or, whatever the business is, the analogy to something that they would understand is that, by paying more, we're actually getting a greater return, and there's more efficiencies in that plan design. But I'd be happy to sell you any of these products because they all fit your needs. But to an engineer, they really like analysis, making sure that they're vetting different scenarios, alternative scenarios, but ultimately this helps them make their decision. And again, this is sort of a combination of multiple acceptable options that all solve a goal, but as well as asymmetrical dominance, where a certain price can help drive them into the particular plan we want. In our case, the engineer actually kind of surprised the agent even by going with the gold option. They really appealed to the sort of efficiency. So that brings us to the the end of the webinar. I hope you enjoyed the case studies. Remember, you can find the recording on YouTube. If you want to go along with the blog, you can see how we set up these different options, what was presented. And remember, on the blog in LD8, there are tons of other different sales examples, how to keep your practice compliant. All of our webinars are on there, our backstory. So do take a look at the articles offered to you if you haven't done so already. And if you have any other ideas for future webinars, feel free to suggest them to us. We're always happy to help. And again, on that topic, if you do want help with any of these concepts, simply ask us a question in our live chat, help, and we will get back to you. So thanks again. Everyone have a great afternoon and appreciate your participation. Take care.